Thank you both for coming. Larry, let me start with you perhaps because of the SAP warning today, perhaps because what have you seen in the price action of tech, you say big tech's days are numbered, if not over. The party is over. Why?
That's right, Tyler. Look, this market has a problem. You can see it in today's market action. And that problem isn't just rising COVID cases. It's not just election uncertainty, but it is also stimulus fatigue. And that's something that we're seeing play out. Tyler, this is a big week for big tech earnings, right? And big tech may be in big trouble. Not even blowout earnings and blowout GDP can save big tech, because we know that election uncertainty means regulatory scrutiny is just around the corner. Tyler, I'm in Boston. This is Elizabeth Warren country. Like it or not, she's coming for big tech. Neighboring Vermont, Bernie Sanders country, like it or not, he's coming for big tech. This scrutiny is going to weigh on these companies, ironically giving way to the next wave of innovation, the next level of the Googles, the next level of the Facebooks. So it's not all bad news. Targeted stimulus may mean more innovation in this country, but don't count on those old leadership stocks to ride you into the recovery.
You know, Greg, Larry likes financials. You don't like financials. You like industrials and infrastructure plays, among others. I'd like you to go into the financials. Now, the financials is a big neighborhood. You've got banks, you've got the big money management companies and more. But tell me why you're so in favor of industrials and infrastructure plays ahead of, say, financials and small caps.
Well, I think the point just made that we could see some rotation out of large cap tech is one that I'd agree with. But it's a question a little bit of where is that money going to go? Now, if we have an environment next year where there is more fiscal spending, but there is more regulatory scrutiny, we would argue that that is going to be more helpful for the industrials than something like the financials. We can look to Europe as a little bit of a playbook as to what happens to banks in an environment of rates lower for longer. Bank valuations are very well correlated to the level of rates. We're going to be in an environment we think of rates lower for longer, and that's a very difficult environment for banks to outperform.
Shepard Smith here. Thanks for watching CNBC on YouTube.